Hey everybody, Boris. Welcome to the Commodity Dollar Update for Aussie Dollar, Dollar CAD, and Kiwi Dollar for August 14th to August 18th of 2017. The weekly technicals this week really, I think, showing the risk aversion flows that Aussie and CAD and Kiwi had as the yen, essentially on the yen crosses, they took a real beating. The data set this week is actually more intense on the commodity front than it does on the majors front. We have the Australian. Let's go through the data. We have, first of all, most importantly, Chinese data coming out with retail sales, industrial production. That'll be interesting to see because actually Chinese data, has not been as bad as the market anticipated. It's actually sort of stabilized. And if China begins to grow relatively well, it should provide a modicum of support for Aussie. But beyond that, we have the RBA meeting notes coming up the same night, essentially Monday night. And then we have, most importantly, on the Australian side, the Australian labor data coming up on Wednesday. Also, we have the Kiwi PPI data, and we end the week with the Canadian CPI, and I think that's it, just Canadian CPI. I thought it was Canadian GDP as well, but just Canadian CPI data, which could actually be relatively bullish dollar CAD. As far as commodities go, they certainly had a corrective move this week, and they may actually be the ones that bounce back more than the majors against the dollar. This, of course, is contingent on a couple of things. If the U.S. data remains relatively weak, the dollar just simply gets sold very, very hard. If there is just even a smattering of hawkishness out of any of this data that comes out of Asia Pacific, including if the employment data out of Australia is relatively good, if the RBA minutes basically suggest that they are neutral to hawkish, that would be okay. Although we are, of course, actually bearish the RBA minutes, and that could have a little bit of a downward impact. But more importantly, if you get the Chinese data that's positive, the Australian data is positive, the hotter than expected PPI out of New Zealand and the CPI out of Canada, there is a potential here for a relative strength trade on the commodity side, meaning the commodities bounce harder or bounce further than does the majors against the dollar. Overall, though, they remain a very muted trade. They remain really the much more lower volatility trade, and the movement could be as little as 50 to 70 points in either one of these trades, with the exception of Canada, which Canada, by the way, was our favorite turn trade last week. We really thought it was definitely ready for a bounce, but it took that bounce, and I think now it's kind of actually approaching the upper limit of its bounce range towards the 128s. Let's take a look at the levels, and then we'll take a look at the charts here, and I'll tell you where I think the numbers are. The Aussie still remains trapped in a 78.80. It could very well remain there for quite a while. 78 looks to be pretty decent support, unless we get some uber bearish data. In other words, if labor data comes in super soft and we have RBA looking very weak, the whole thesis completely turns itself around, then Aussie really comes under a very serious selling assault, and I would be very bearish Aussie at that point. Dollar CAD really looks like it's maybe inching towards the top of that rebound range. Those 28 could come back down and maybe even test 26, 25.50 to the downside. And Kiwi, again, 72 seems to be pretty decent support for the trade. We'll have to look at the PPI data as well. What was interesting about Kiwi was this incredibly confusing RBNZ statement last week, where they actually sounded relatively hawkish at the statement, where they didn't communicate any type of displeasure with the strength of the Kiwi in any forceful way. They sort of said that the economy is expected to be growing at a relatively slow pace, but there is still some existent inflationary pressures building up in the economy, and basically left the market feeling like they really were not that concerned about being accommodative. And then, like 2 hours later, completely surprised the market by testifying in front of the Australian Parliament, New Zealand Parliament, saying, yeah, they would interfere in the Kiwi if it got much stronger, which brought Kiwi down harder. Now I think we go back to sort of trading the yield play and the inflation play. Bottom line is, it really feels like none of the central banks are going to be moving anytime soon. And if that's the case, the carry trade gets a little bit of a modest bounce as we go forward, especially if we get more negative data out of the dollar. So I do like the commodities on a relative basis strength bounce here as we go into the week. Let's take a look at the charts here and see how everything sets up. So Kiwi, yes, obviously very, very weak weekly trade, but we did hold the 72s and bounce back off the 72. 72 remains very, very key support. As long as that holds, we could make a stage a modest rally back up towards the 74 level on the Kiwi. On the Aussie, the trend was to the downside, but also very, very muted. And again, stopped well short of the 78 support level. So any positive data could push us higher a little bit here on the Aussie back towards the 180. Again, it looks to be like a very, very small, low volatility trade in both of those trades. The bigger volatility trade, of course, is in the CAD. The CAD bounced back as we expected it to be, but didn't really kind of plow through this 28 level. And to me, the 28, sort of 20, really, it's actually, if you look at it technically, it's this 27.30 to right over here, which is literally 27.80, basically the sort of 27.25 to 28 level, which was former support, now becomes current resistance. And if you get any type of support from oil, in other words, if oil can kind of hold 48 and maybe make another run towards 50 with a stronger than expected CPI data out of Canada, we could see this thing coming right back down towards 126. As much as I like Canada to the upside last week, I'm kind of liking it on a relative basis to the downside, meaning I like the strength of the loonie as we go forward. So that's how it shapes up. It's still the low volatility trade as far as the calm dollars, but we could see some relative strength out of calm dollars versus the majors, especially on the crosses. So I'll be looking for some ideas here for you guys on the next video. Wish you guys the best luck, the best trading. Boris, over and out.